Hello, this is the chart profit video. Friday 18th of November. We are coming up to 2 hours into the trading day. As we know, recently the 6 month point of control migrated up to 2159.50 here on the E-mini S&P, and since then we've seen three value areas, Tuesday, Wednesday, Thursday, printed above that level, which is encouraging. We've also had aggressive buying marked up here, and the note from pre-open on Tuesday mentioned the fact that that point of control had migrated to that level, and I suggested that that was indicating completion for what was the current distribution, and I suggested that a new directional move may begin. We also said that significant buying, which is green marked above that level, or selling red marked below, may well be the start of the next move, and we had aggressive buying marked here, so I'm thinking at the moment this is looking fairly encouraging. The caveat is we have to hold this level, 2159.50. If a new distribution has begun, and if it is higher, this will not be tested now. So the momentum and the breadth have picked up on the pulse chart. I'll show you that in a second. This is the breadth indicators through Thursday for the New York market chart. You can see these bottom two indicators have now moved into supportive positions above their levels. That in fact gives us this green area here on the breadth, and you can see below here on the price momentum that has come through zero and we're heading higher. So this is much improved just within the last 4 or 5 days. Just reviewing a bit, as we know, the spider that we're looking at here on the chart above did briefly test below, just a couple of days we tested below 209.90, which is the major time support, and we bounced from there, and then the green started coming in. So all looking a lot better than it did late October. Here's the current chart for the spider, printing close to its recent all-time high, not exceeded that yet. Previous all-time high on the Russell 2000 ETF IWM was here. This week we've exceeded that. Currently we're holding. Incredible rally in the Russell since it made its low here right on the major at 115.35. Q's lagging a little, but currently printing just above its 1 year at 117.25, this level here. Be good to see the Q's holding that level going into next week. Equivalent level on XLK. Technology sector is 47 dead here. Again, good to see that holding going into next week. Looking here at the UK's FTSE 100 index, we spoke about this band of price here, which represents important controlling prices on two time frames: 6 month at 68.54, 7 year at 68.23, and we talked about this last week, but this week we spent just about all the time, I think, underneath that level. Really want to see the FTSE back above here. That would be much stronger price location than currently. A little bit worried about this. You see consolidation between below a major level like that. 2 or 3 attempts at it, you often then see capitulation and a break to a new low. Currently we're hanging in there, but weak price location. Ultimately very little movement this week from last week on the DAX. This is the major support here, the half range. 10.545, the major half range level, dotted blue line. This represents the 3-year value area high, which has been a problem. We've discussed this. I'll be hoping that the DAX can hold that half range, and then a point of control, a controlling price of some degree may shift higher, and then we may see that value area high exceeded. Currently consolidating, but at least it's above that half range point. So sentiment indicators, we're looking at the Ridex. We hit a 7-month high in the Ridex back here, which was very close to the top. From a contrarian point of view, that wasn't particularly a good sign. Markets sold off from there. But this level here, for early in the week, that possibly the Ridex ratio might push above that level, and that would be considered possibly a little over enthusiastic. But actually just yesterday there was quite a decline in the ratio. We could easily hit, if it goes any lower, 3 or 4 month low for this, and I did say today that in fact the market had been up the last couple of days. It looks like it may be breaking out, and the Ridex has actually come lower. In the short term, that's usually a bullish indication. Bull fund assets, if we just look at those in isolation, have come off, but I'm actually looking here at the bear funds. Again, earlier in the week I mentioned this. Bear fund assets that I follow actually reached a low, or the lowest level since back here, August 2015. indicating in this data there's not a lot of bears. That can be a little troublesome. But price being most important, not going to worry too much as long as the S&P holds, or the E-mini holds above that level there, 2159.50. We'll look at the other sentiment indicators now. This is a public poll from AAII, and we definitely have bulls emerging in this data. The bulls percent in this poll was higher this week at 46.7%. That's the highest since February 2015, and that is up, so 46.7 up from 23.6 just 2 weeks ago. Looking back at the data historically, when this has happened before, in the instances I looked at, to be honest, bulls percentage rapidly shooting high like that is not a clearly bearish sort of contrarian indication. So on its own, I'm not too worried again about this. It would be if the Ridex turned around and went up above 7, but right now, although we note this, there's bulls emerging in this data, it's not enough to immediately take a contrarian point of view. Seen it again in the investors intelligence data. The bulls percent itself was higher at 51 from 42.9. That is quite a jump. Bears percent was slightly lower. If we look at the 4-week moving average of net, the black line here, the bulls minus the bears, that's up a little this week at 21.52. But the previous week, 19.42, that was a 22-week low. So we're coming off a low base as an indication that bulls who maybe got a bit wary in this period here now may be coming back in. I'm going to show you the Lipper US fund flows data, data being in the middle here, this comment, ignoring the chart. The chart is actually not up to date. I can immediately see I haven't updated that. That will be done for the ebook. But if we look here, Lipper US fund flows reported equity fund, including ETF inflows, 23.6 billion. That's the largest single weekly inflow since December 2014. And I read earlier, I'll need to check this, but I saw it mentioned that as far as single weekly inflows goes, that is actually the second highest on record. So 23.6 billion flowed into equity funds over the past week. So we'll need to monitor this, particularly the 4-week flow, this black line here, which is obviously going to be higher this week. Looking at the supporting charts, this is TLT, the T-bond ETF. No respite for the chart here. It's down at a new low. The big support, wish it was a little higher, but it's down here at 117.15. That's the major point of control. Are we going to see this tested? We talked about the falling knife last week, since we broke below that 3-year here. Well, that's quite a move, isn't it? Looking here at GLD, the Gold Trust ETF. As I speak, we're just on a new low here for this move. Chart is right now just testing below the halfway point of the half range from the low last year to the subsequent high. Comes in here, and we're just testing just below that at the moment. Price printing time below here would be extremely weak price location. Very oversold the chart, and here we're looking at the Ridex precious metals assets, which have seen another sharp sell-off recently down to here. Looks like the retail are piling out of precious metals. So there's a critical point here for GLD. Really don't like seeing it below that halfway point. Just wondering if we can recover a little bit here going into next week. USO, the oil fund ETF, as we know, is in a weak price location below this major up here. But having tested the half range here last week, we have recovered, and currently we're holding above that level. So from this low to this high, that's a very important low there obviously, to this high, here's the halfway, we have recovered back above that level. I'd suggest that price printing back now again below there would be a real negative, but currently we're holding that level. And here's the big story, obviously the strength in the dollar has now exceeded its 2015 highs. This is dollar yen from this low to this high. Here's the halfway, pretty much support that move back above the 4-year, and we're heading higher, and that looks like a strong position on this chart to me. Talked about the weak position in the Euro FX chart. You can see it here, really capitulated this week. I'm saying it's been in a really weak price location since it broke below the half range here, off the low to the high recently, just a couple of weeks back. The euro doesn't like it, the pound doesn't like it much either. Had a good rally recently. We're selling off from there on the low, nearly on the low for the week at the moment. and the Australian dollar really doesn't like it. I was looking over the last few weeks at the possibility of some strength long term coming into this chart. Required time being spent above this major here, spot 76.50, and I said something like an oscillator low or something would be a bullish sign, but probably not yet. Well, we've certainly seen some evidence this week that it definitely isn't yet, so I would wait for that kind of price action on this chart. Current levels, we have actually reached the excuse me, the halfway point from this important low to this high here, so there may be some support here. You need to see some base building at least. Price below that level would be really weak price location, indicate lower for the Aussie, and again that would be more evidence for strength in the dollar as it breaks out. I'll obviously be reminding you in the pre-open next week, but the most important level to monitor for the markets, currently 21.59.50 for the E-mini. If we are in a new directional move higher, this will not be tested next week. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.